Hi guys, welcome back to Father and Son Investing. Today we're going to talk about Nanox. They had their fourth quarter and yearly conference call today. We're going to discuss the reasons that I think to be optimistic about Nanox, and we're also going to discuss my reasons for worry about Nanox. So let's get to it. All right, my first reason that I think to be optimistic about Nanox has to do with their FDA Q submission. Now, if you're not familiar with what a Q submission is, go back and watch my last video where I talk about what that entails. So the FDA Q submission was submitted about 77 days ago, and one of the questions in the question and answer period asked about the progress of this Q submission. So what are the areas that I get out of this to be optimistic? Well, first of all, the answer from Mr. Meltzer, who is the CEO, indicated that they had already fixed all of the FDA comments in the previous 510K for the current iteration of the ARC. Now, also when it came to Mr. Meltzer's answer, it sounds like they are in pretty good communication with the FDA right now. In fact, he indicated that they expected it would be 75 days before the FDA would even respond to them. They did get a response in about 4 to 5 weeks and scheduled a meeting, and they've had several discussions since that time. Mr. Meltzer also reiterated that they are making a lot of progress in this area with the FDA, and he is convinced that doing this Q submission rather than trying to come up with another 510K submission was the right way to go. Now, he couldn't give a timeline for when the new 510K would be submitted or when this actual Q sub discussion would be finished. Now, there was one other important question asked during the question and answer by this same analyst. He asked whether the discussion had come up for a de novo process of getting this Nanox ARC device cleared or approved. And Mr. Meltzer had this to say. He says, right now the answer is no. They're not going into details, but it did seem that it was not going to be that way. And he said, I would say it's not going to be identified as such. Now, that de novo process takes a lot more to get through because it involves a lot of studies versus a 510K submission, which if you're not familiar with that, go back and watch my previous videos as well that discusses relatively how much quicker a 510K could be versus a de novo. All right, my second reason to be optimistic for Nanox has to do with their production capabilities. Mr. Meltzer indicated that they were working to establish their production capabilities towards the deployment of the Nanox ARC system later this year. This was further clarified during the question and answer period where Mr. Meltzer indicated this. He said, right now, we don't change anything with respect to what has been indicated. Right now, I would say that due to the fact that we have identified what are the long lead items, to me, the long lead items are the particular items that go into their product that are going to require extra time or effort to get those items, particularly in this supply chain restraint that we have seen with so many industries around the world. He goes on to say, we have already ordered what is needed for the foreseeable future, as we can say. The other thing that we have indicated that in the first quarter, our assembly line will be ready for hundreds of machines on a quarterly basis. So right now, that's where they are. The third reason I have to be optimistic is less tangible, and really that has to do with Mr. Meltzer himself. I think that he sets a good tone for the company. I think that he is probably the one that initiated the need for the Q submission to the FDA rather than retrying another 510K submission. I think that he is trying to steer the ship in a good direction and provide stability for the company. The last reason that I want to give for optimism for Nanox is a small one, but a noticeable one. First, let's just talk about what the expectations were for Nanox for this quarterly report. Right here we see what the analyst forecasts were for the quarter as well as for the year 2021. For the fourth quarter 2021, we see that the earnings per share was rated to come in between negative 0.42 and negative 0.25 with a consensus of 0.33. So I'll turn to the press release for their earnings report here, and we see that on a non-GAAP basis, the loss per share was 30 cents per share, so coming in a little better than what was expected. Now we'll turn our attention to the full year 2021 analysts' expectations, and we see that analysts expected the range to be from negative 1.72 to negative 1.09, with the consensus at negative 1.34. And turning back to the earnings report numbers, we see that on the non-GAAP basis, their loss was 81 cents per share. But on the GAAP basis, we'll see that their loss was $1.26 per share. So again, they beat the analyst's expectation. Not by much, but they beat it. The fact that they were able to do that, I think, is cause for a little bit of optimism. All right, now we're going to turn our attention to why I think there is some cause to worry about Nanox as well. All right, the first reason that I see for worry with Nanox has to do with cash, both the amount of money that they are burning as well as the amount of money that they have on hand. Let's just look through the press release describing their liquidity and capital resources. We're going to look at this paragraph right here. It says that as of December 31st, 2021, the company had $88.7 million of cash equivalents, and short-term marketable securities. These are securities that can be converted into cash rather quickly. Also, as of December 31st, the company had a total current assets of $94.9 million and a total current liabilities of $52.8 million. That term current simply means really within the next 12 months. So they have assets that could be turned into cash within the next 12 months of $94.9 million, and they have current liabilities or bills that they owe within the next 12 months of $52.8 million. That gives them a working capital of $42.1 million. What does that mean? That's what they have to fund their business for the next year. Now let's again look at this same press release, and we'll look at the amount of cash that they used in operating activities for 2021, and that was $38 million. So what they used for 2021 is just shy of the working capital that they still have left. Now this is not necessarily terrible. They certainly have enough cash on hand to pay all of their liabilities for the next year, and they do have enough cash to fund their business for the next year, it appears. They're still going to lose money, obviously, but they do have the cash that they need to fund that, given if they do similar to what they did in 2021. Nevertheless, if cash should grow tight, I would not be surprised at all if they don't have another stock offering, which of course will dilute the shares. All right, my second reason for worry for Nanox also has to do with the FDA. And you might be saying, wait a minute, you thought that was great, their communication with the FDA, and that is, I think their communication with the FDA is great. However, when it comes down to finally getting that 510(k) submission, there have been so many delays with the FDA over the last couple of years, not only for Nanox, but for other companies, that I would not be surprised at all if their next 510(k) submission also gets significantly delayed. Finally, what's my last reason for worry for Nanox? Well, it has to do with the absence of 2022 outlook. They did not provide any guidance really for 2022, except for a little bit when it comes to revenue for USA Red and for Zebra, which now is called Nanox AI. To find any sort of outlook or guidance that I can see, it's not necessarily official guidance, but it was during the question and answer period, someone had asked about the revenue run rate for the AI and USA Rad. Of course, revenue run rate simply means if you were to take the revenue for a quarter and then multiply that times 4 to make it on an annual basis, that would be the run rate. So the answer that came in said that the revenue run rate for USA Rad should expect for around $8 to $9 million on an annual basis. And for the AI section of the business, they're expecting about $3 to $4 million. So should they achieve that on the annual basis, we're looking at about, we'll give the high end 9 million plus 4 million, so about 13 million in revenue possibly by the end of the year. Now, of course, that may change quarter to quarter. They may see revenue increases or decreases depending on how those two businesses or subsets of Nanox function. Now, there are other things that I found interesting within the quarterly report and the conference call, but I'm not going to go over all of those, at least at the present time. So there you have it. My reasons for optimism have to do with the FDA and their communication, has to do with Nanox being prepared to manufacture their product and having looked at some of those difficult to get items and procuring those. It has to do with Mr. Meltzer and his tone and his ability to sort of calm the ship here and keep it headed in the right direction. And that little bit of a earnings beat, however small it was. Of course, I talked about the worries that I have. One, the cash that they have available to them and the cash that they're burning. The FDA and the delays that will probably come regardless of what the optimism was by Mr. Meltzer and their plans for manufacturing by the end of the year. And then lastly, the outlook for 22, or the absence of significant guidance for 2022 from Nanox. If this information was helpful for you, please give us a thumbs up, and we'd love to have you as a subscriber. Share this information with a young person in your life, particularly if they're a Nanox investor. And as always, enjoy your investing.